This is Justin Pulitzer. This is my weekend review for Sunday, June 19th, 2016. A lot to cover, going to just dive right in. So I usually start off with covering the 6 market keys and have been either flowing or combining with the 7 Fed keys. I think after this week and after the Yellen statement, we can do away with the Fed keys for a while because they are now firmly on hold and off the table. I've often talked about there being a subtle step before a hike would take place. That would be from her switching from dovish to neutral to hawkish. She is still in the dovish camp, so I don't see any rate hikes coming anytime soon. We can reevaluate, I believe, in September. The data has been terrible. Bullard, who's a Fed head, who's often one of these pop-off talking heads, has come out and basically just said, we don't see any rate hikes maybe for 1 and maybe coming in 2 years. So we can now firmly take the Fed off the table as a concern, at least short term. Let's flow into the 6 market keys, and I'll discuss a little bit about the calendar of the gauntlet that we have to navigate, particularly with the Brexit coming up on the 23rd. Then I'll get into the S&P, the major market indices, and talk about a few stocks. I've been trying to keep this format a little bit shorter lately, so I don't know that I'll cover everything that everyone always wants, but I think I will cover enough that you'll all be very pleased. So here we are. We have the VIX. I often start off here. I've created a VIX key here that I think can help people navigate my views on premium and what to do with it when. So I talked about this area that I thought we were in a possible lower volatility environment with potential spikes up that we get often with these fears, and this one is, of course, the Brexit. I think this just took a little bit longer for people, for some reason, to realize, sort of like what happened with the Fed funds futures that we had talked about, that the Fed had been so badly discounted out that I thought there would be a snapback and that it was so skewed to one side that there was such an overreaction. That seems to be what's happening here with the VIX. We were just basically down here kissing the canvas for so long. I think that people just realized, hey, we have this Brexit coming up and we better put on some protection. And we did get a bounce up in the VIX. It did clear the channel, and we are up and over, holding over the 200 MA, which means there is some potential for still higher in the VIX, meaning up to the 25 area. The good news is that it did top around in the 22s. As long as we're below the 25-20 area, there's really nothing to talk about. You can see once you get through it and close through it, that's when you get like flash crash moves. That doesn't mean you can't have some nasty price action into the 25s, but I think, I hate to say this, famous last words, the rate of change might be slowing. I do think we could see the 25s, but I don't necessarily know that we're going to get up to the 31s. At least not the first time around. If there is a Brexit, it's possible that the algorithms and VIX could pop up here, but I think the most people don't think there will be a Brexit. We'll talk about that in a little bit. So that is the VIX. We are kind of in the upper end here of, we're kind of in the medium point in volatility here. We closed at 1941 based on the chart here. We are from up to 19 is medium, so we're starting to get into the elevated area in the 22s, and I think a lot of people saw that, and that's when they decided to sell a little bit of premium. Down here, there's really all purely directional play. I wouldn't be a premium seller. I'm more of a premium buyer here, either playing long or short via calls or puts. Up here, I'm starting to get interested in maybe selling, betting on what might not happen, meaning selling out of the money premium via calls or puts, or spreads or ratios or however you want to play it. The dollar is really key. This is sort of a very important gauge to watch. You can see we had this massive run up. We had this sideways consolidation. I drew in some brackets. I may do some adjusting here because we have been getting a little sticky on either end of it. But moves on either side have proven to be quite unsustainable, even though the moves up were starting to get a little more sticky, meaning it would spend more time up above that range as opposed to moves below being more unsustainable. But now we're starting to get a little softer in the dollar, which is, I guess, good for risk assets, risk premium. You can see this was the move up. It was a big, nasty kind of reversal day bar. I didn't really understand why this had gone up. The Fed was really quite dovish. I think Yellen mentioned the dollar being a concern. I think this move really was kind of a mistake. We're now back below those 2 days ranges, basically hugging the 50 MA and on the backside of this prior downtrend and into these reference lows. So it's kind of F or walk here for the dollar. Anything below 24.47 is considered, I guess, a little bit bearish. Look at the high of day here on this bar, and just to show you how well my range is working, the high of day, if you look up back up into here, I'll put it back over the number, was 24.47. So for me, that is really the key. If we can get back up above now 24.47, if you want to play a row long, meaning a right out long, I can kind of countenance that play. Look at the low of this bar here, 24.48. That shows you this is the kind of the pass don't pass line. If we get back above it, I think we can play for right out long. If we stay below there, it's right out short with a stop above there. Really keep it simple, stupid. A weak dollar may not show its hand in stocks right away, but it will be very important. All right, so I get a lot of questions here about gold. I am not a huge fan of playing gold, although I've had quite a decent, I wouldn't say a decent size, but I have a little position on in silver. I've been playing a little in and out in gold too, but I over the years, but it's not a big, it's never really a huge position for me. But I will say this, I think I really covered the analysis of what I thought would happen here with gold quite well. I need to actually adjust this now because we did have this day. What was the high of day there? 125.67. All right, so what I talked about on Periscope was that we were going to have a bit of a false dawn, a false breakout. That I did think we would take this high, but we would stall on the backside of this trend line. And I think, let me draw this in. I want to just draw this in and show you what I was talking about. We'll use this as the high since it was really the big bar, 123.93. All right. Close, but no cigar. We do need to make an adjustment here. All right, so this was our reference high. Let's just call it reference high of day. So what happened here? I think everyone here got geeked up, and obviously once you get through here, you get short covering and people chasing for the breakout. But what I don't think that they realized was that we came up from the bottom so far so fast, and we had the backside of this prior uptrend. And I said in the Periscope, I think this would suck in a lot of new longs, and people would be really bullish thinking we had the breakout, but instead we had quite a solid reversal day. I hope people caught that. I said I thought we'd press into the 24s and into 25s. That worked out quite well. We reversed. I didn't really put this out there, but I really thought that the move should have been larger given the news if gold was really to remain bullish. And I think, if I tweeted out every little utterance of things that I observed and thought, I probably would never have time to actually trade. But this could be a potential secure high here, although Friday did come back up. Let's use this demarcation line, meaning this run up here and this kind of 123.93. We closed on Friday at 123.95. So we can use this Friday pullback range, this sort of bar as the judge. Anything above there, I think we can rally a bit more. Below there, you can do a right out short, and then I would be adding to that short on a break of 122.23 for a move back down, probably to the 50 MA. I would think maybe at the very least. So that's my thoughts on gold. One thing. This is a little trick that I've used for a while. You know when gold is going to have a sustainable breakout when silver is leading the way. This is often really prescient on Fed days. This is a trick I haven't heard anyone else talk about, but I assure you it works quite well. Silver here made a lower high. It didn't eclipse here. If silver was running and off to the races ahead of the gold breakout, I would have thought that gold would have run because silver is sort of a lot of people call it the poor man's gold, but it's really kind of the levered way to play. And when you're not seeing that appetite for risk in the metals, meaning this couldn't eclipse here, it gets a little bit more iffy. Always consult your silver chart to gold. If silver is leading gold, gold will continue. If it is lagging, it's probably a little bit more suspect. That is a proprietary tool I use. I find it quite helpful. TLT. All right, so we have a potential secure high play in here in a reversal bar. Look at this. We got close to the old high, gap up, sell off, fail, and now it's sort of almost looking like a hanging man. It really is. And you have a couple of day range here. I would say anything above this bar here probably will negate this hanging man. But anything below these 4-day range low is a right or right out short. I think at least to down here and potentially down to one of these fibs. Look where the 61.8 is. That's really where the meat of the congestion was in the range distribution. I would, and the 50 MA and the 100 will probably come up into there. I would love to play put spreads or put ratios for a move back down to there near dated, either same week or the next at the latest. If we did a measured move, like if you took from this reversal to here, that would be $8.04. That would take you to 129.52, which is roughly the 78.6. I don't think it's going to be, look how long this took. It wasn't a straight line. So I don't think that there's necessarily just a complete risk to the, elevator shaft to the downside, but do keep those levels in mind. I think between here would be a good area to play right or right out long for a bounce, considering we did make a new all-time high. You could get one of these type of things. I think it's going to remain kind of the status quo for a while because the Fed is going to remain on hold, but I do think that this panic that we've seen, into Brexit, is going to probably subside a little bit. This felt to me like forcing action. Just look at this. You have the gap up right into the downtrend line. The next day was kind of like a stagnant bar, and then it was just up, a reverse, so opened at the high, closed on the low, kind of doji, then, of course, the reversal pattern. This was just feeling long in the tooth. Remember what I said about coming up from the bottom? The best thing the bulls could have done here was just kind of consolidate here and then go, but they took it first. So I think that the manner in which it broke out was a little suspect, and I think it needs to do, at the very least, a little bit of backing and filling here. Again, if there's Brexit, there could be some algorithmic type of spike, which could be a secure high, in my view, for quite some time if that does happen. This also, by the way, a little pullback would be healthy. I think when this moves up rapidly, people often ask me what's the relationship with the TLT and the SPY. The truth is if this is in an uptrend, SPY should be doing well. If this is in a downtrend, SPY should be doing badly. This just moved up so sharply, it got people afraid of recessions. And when you get spiky moves in TLT, I think it makes people nervous. It's like I said, lower rates are positive for stocks, but not if they happen too fast. That gets the fear mongers going, and honestly, a little bit rightfully so. HYG is just pulling back. It's chopping in range here. We did break the uptrend line. I don't know what I want to make of this. This is sort of the high yield, meaning the lower quality risk assets. It's just kind of chugging along here. I guess you can use this hammer reversal and the 200 MA. Anything below there and this range to me would probably fill up the triangle down to the 80s. So you could play like a put ratio or put spread for a move down there. If we just hold above that high, that 83.15, then I think it's kind of either right or right out long or just sit on hands. Not much to see here. I kind of use this more as a gauge as opposed to a direct trading instrument. Oil. All right, so I think my call on this was quite prescient. I want to just talk about what I said. I've been saying for weeks. I thought between 49 and 52 would be resistance. The high of the move here was 51.62. I thought we would pull back at the very least to channel low, possibly the 50 MA. We stopped dead on the 50 MA and this range distribution. Friday, you had a really big move back up into the channel. So I think longer term, the move for oil will probably get back up into the 60s. It's not going to be a clean path. I would say you can use the Friday range as a gauge. Above the high of day, it's going to go higher. I think midway to this point here is this area, this closing basis. So anything above 47.28, I'm on board with long. Anything below there, I'm on board with more neutral to short. Keep it simple, stupid. Another test of the 50 MA probably wouldn't hold again, and then you could kind of step on the gas to the short side for a move down to 43s or even 42s, 41s, where I think would be much more solid support. So that's really the way to play it. Long over Friday's high, Or if you're already long, you can use the 47.20. I'm sorry, 47.28, 47.27. That as the as the gauge. Anything below there to me gets a little more iffy. Let's just keep it real simple, stupid with oil. XLE still holding trend, pulled back like a champ to the 50 MA. We held the trend, and now we have like some bottoming tails and dojis and stuff. I was really I thought it was a little telling that this didn't break along with oil. You often need this was a bit of a look below and fail. We're back above the 50. The death of oil is much rumored. I'll talk about Exxon in a minute, but for me, I'm still going to be in the camp that oil and oil stocks are still buyable on dips as long as we hold trend and as long as we hold 200 MA. A 200 MA retest will be a load the boat right or right out short, meaning try it in size right or right out. That's just going to be simple. If it breaks, there's going to be hell to pay, so to speak. There'll be trouble. But for right now, this is still looking okay. Exxon, like I talked about with silver and gold, Exxon is an amazing tell on oil. And you can see here we actually made a 52-week high on Friday. We didn't close at the dead high, but even with all this talk, look how Thursday oil had the breakdown. ExxonMobil closed up near the highs. Something wasn't hitting right there, in my view. I would not have been comfortable going home short oil with Exxon hugging the 52-week high list and oil having a bit of a breakdown. That, to me, confirmed a bit of the look below and fail. If Exxon could retest this channel low, I think it's a right or right out trade. I don't, again, see real major structural problems in the oil complex unless this starts taking out 85, 84, really between 84.70 and 86. I don't want to get into 86 why that number is important, but it is. I mean, as long as we're even if you want to keep it even simpler, above 87.44, this was this peak high. Look where this pullback low came to. This area, 87s. Let's use 87s as the new 83. I don't want to say 83s because 83 to me is like the holy grail of oil. But let's use 87s. If we're above 87s, we're still confident. And Exxon below there, to me, starts getting a little bit iffy. But I'm still long Exxon. I'm honestly, my fingers are crossed for a pullback to re-add. I've had a lot of short puts kind of come off, and I'd like to really add them back on. China, this is just forming. I don't even know what this is. This is just a kind of an ugly, choppy pattern. You kind of false dawn here. A break back down. It's still holding trend off the lows, so I guess it's kind of quote-unquote okay, but it's sort of on the wrong side of the 50 MA. You know how people often joke around the wrong side of 40 in age-wise or whatever? This is the wrong side of 50. You had a retest here, a retest looking here. So as long as you're below the 50 MA, I am suspicious of FXI. We didn't quite get the retest of the 61.8, but I do like that we are kind of making higher lows. So let's just keep that simple. I would be more bullish now if this broke out again, like this kind of broke out, went back midway to range, and then broke out again. I would say probably we're turning in FXI more significantly. If we start losing these lows in the channel, we're probably going to revisit these lows, and then may God have mercy on your soul if you can figure that one out. Germany, this has been a big point of contention. This is like heart of Brexit, heart of darkness, right? The heart of Brexit. You got the 61.8 test, the bounce, you had this big look below and fail, and then even notice the S&P was strong on Thursday and then weak on Friday a little bit. Germany closed up near the highs. It is really back to this pivot area, so it's kind of F or walk here. But there could be some room still to the backside of the old uptrend line up near the 50 and 200 MA, where I would maybe could even push into the 26s. But I think up here is going to be more of the tell, and that could be a bit of a false dawn. People will be like, oh, it's into the gap, and not realizing it's came up from the bottom and in time to kind of lighten up. But I do think that this is a good sign a little for Germany. If you were to lose the low of day here, I would be a little more cautious. What is going on with Germany? The bonds might be finally peaking. I talked about this getting parabolic and being a short. I said anything as another spiky move here would be short. I don't know really how easy most of you are going to find trading this BUNL because it's kind of I don't want to say shit show, but it is. Look at this. This was a huge reversal. I mean, really big. This is, to me, is getting unsustainable, these types of moves. This, to me, is more the end of the move than the beginning. I think that that's starting to show. This could be tough to discuss here with this Deutsche Bank. This did make a look. It was a bit of a look below and fail because it just wound up being a low and then kind of closing on the high. We're getting back to testing the backside of the old uptrend. I mean, the old kind of consolidation channel. I know a lot of people are really bearish on these European banks. I think it's just because the same problems they're having as the US banks, and they have it kind of exemplified with exclamation point. They have it with an exclamation point. They have now negative rates. How do these companies make money? They can't borrow cheap and lend expensive. So that's really the problem. I don't think it's really a credit issue. That could, again, be famous last words. Don't know that for a fact. But look, this was the old reference low. Let's draw it in. What was the low here? 1478. Oh, I did it perfect. Price level. So ref low of day. And look, we had a look below and failed and closed above it, and then a gap. It kind of is starting to look a little bit like this motion. So we could have a little bit more up in the German banks. We'll see how that goes if we can get into the 17s, but. Yeah, I mean, this has been weak, and I don't, like I said, I don't think it's really because of credit. I just think it's because of the rates, negative rates. These guys can't make bucks. Same nonsense with like Credit Suisse, for example. Same type of pattern. This one's actually a little bit weaker than Deutsche Bank because we are kind of, did we close above there? Let's see. Close was 55. So just below the old reference low, and right at the 10-day. So this is again F or walk with this. We'll see how this plays out, but it is still rather controlled in the channel. Alrighty, IBB. So this is also a big risk on, risk off gauge. I've talked about 275.40 to 271.77 as being the key. This is just looking like it's forming again a bear flag, and this is either going to really break down here and finally get us the full basically 100% retracement, or it's going to bottom out here at the 78.6 and we're going to break out to the upside. I don't really like anticipating. I like to wait. I think one thing though, and again, this is again the nature of price action. This is again coming down from the bottom. Coming down from the top. So we could have a bit of it. Like if we get here, this might not be a short if it's an initial break. I'd probably actually be looking to buy it near the lows for maybe a smaller bounce. I just don't see this coming down all the way from the top of range and then really convincingly breaking through. So again, but that will be telling. It will give a directional bias. But I don't think that this is going to be the big one, so to speak. Like it's going to come all the way down from the top of range, break the lows, and then just keep going. I think that it would be probably a place to start looking to cover, and then looking to really lay it out in size on a move back up. Gilead not looking too pretty. This is just choppy. I know Barron's came out. It's a cheap stock based on their earnings, but I don't know if they're going to be able to have PE multiple expansion. This to me just looks like it's going to mark time and chop. I don't know how easy this is going to have a breakdown, but not really anything I'm seeing much there in terms of being a great looking chart. SPY. So what's the skinny with the SPY? All right, I want to really emphasize here that this is a bit of a harder chart to read because of they did have the dividend. This went X, so this move below here was exaggerated because it was down an extra $1.50. But there is some important levels here. I'll re-put that in once the video is done. Look, this was the former head. Let me draw that back in so people can see here. This was the old Head and Shoulders play that failed, that got everyone so nervous. Any move above this right shoulder really negated the head and shoulders. And you can see once we got above there, it was just never really looked back. And we've been struggling with that level. The high of day here was 208.57. We didn't close above there, which had this close to me suspicious. Again, this is the Fed day. I will say this again, and this was a narrow-ranged Fed day. This wound up being a look below and fail, and this was, I'll explain why. You had everyone, I think a lot of people shorted up here. You had overnight inventory that got short, and then you had a really big move down early, and I think it just needed a chance to rebalance. We made a higher low here on Friday into some key reference levels. I talked about in the weekend review last week that we were nearing the top end of range. We had poor highs up here, and that we were entering a narrow window with an opportunity to pull back, and it did it quite dramatically. There is even still room down to the channel low, and really where this began. We've talked about how 204s are really key, but this area really does need to hold here. And I talked about that I thought we would at the very least see the 50% fib and might and likely see the 61.8. And we closed Friday exactly on the 61.8. It was 206 half. We closed Friday at 206.52. So that was quite correct. So what now? All right, so the answer is we are still within that window of potential pullback, and I don't really see a massive rally ahead of the Brexit vote, which I believe is Thursday. What I do see, it could rally back up. It would not surprise me. It could also just list sideways or go a little bit lower, maybe try to fill up some of these gaps. I will say this, since we came down from the top, I do think that these 204s would support again and there would be a rally, but it would have come down too much in my view. We really should not have been retesting this again. And as crazy as this sounds, we had this head and shoulders set up, which failed. I'm going to show you something that really might bake your noodle. We could have a situation here, right? We could theoretically have a situation where we now, oh, come on, remove the oval. I drew it in twice? Jeez. We could really now have a situation where we have a left shoulder, a head, draw it from the bottom, a head, and then potentially a setup for a lower right shoulder, which could be a little more scary. So we could really come back down even this low, then rally back up into this area, and then really roll over, and it would be a much larger head and shoulders pattern as opposed to this kind of like little wussy one that didn't set up. I don't know that that's going to happen. I really don't want to anticipate that. That's a big leap in my view. But I will say this, and I'll probably leave this on because if it does happen, I'll look like quite the genius, right? But we could come back down. I think that we may have a little bit of early weakness, potentially down to here. Early weakness I think in the week would set up well for a long into the end of the quarter. I think lower into Brexit is probably safer, or at least not having rallied really super duper hard. If we can get Brexit out of the way and it's okay, then I think it paves the way to, since we came down a lot and we did kind of make a higher high on this leg, I think bulls might still be encouraged to think that we can have a rally, and we could see a rally into quarter end, which wouldn't be this week, but the following. So if we have an early strength this week, I will be a little bit suspicious going into Brexit. If we're kind of just sideways to down and the market is just getting itself more and more short, then I'm going to be thinking long. Brexit move, I think it's like $5 or $6 that's anticipated in SPY. I will clarify that in the notes to this video. So if you look in the upper right hand corner at some point here, I'll show what the move in SPY is going to be. Yeah, so that's the deal with SPY. As far as levels go, where do you need to be worried about? Let's use this was the Fed day range, but I really actually prefer using this day's range, and I'll show you why in a minute. Actually, I'll show you right now. One is that this was an excess low, and this was a hammer too. You really should not see below those lows. If anything below those lows, in my view, is going to be a short, probably for at the very least the channel low to here, and more likely a gap fill. If you were able to get above the high of day of this bar, and like I said, that was the failure of the right shoulder, I think, and also the body of the Fed day. Look at this. This is the body of the Fed and the higher bar of this day. I don't think that this will resist very much, and I think we will see higher in the market, potentially back to play for the old all-time high, considering the 61.8, that I would be considering it as a successful retest. So that's my view on SPY. Short below the 2-day lows, and then long really above this high of day. Since the Fed day was rather sedate, I would say, I want to really use this day because I think this day was really the more important of the 2 days, as oddly as that sounds. And it would be over the high of day here, and it would also be over the body, the bulk of trade of the Fed day. So that is how I'm going to be looking to trade SPY. I wanted to talk quickly about a secure low setup. I get a lot of questions as to what that looks like. This is a textbook secure low. Look here, you were down hard after into the close. Overnight inventory was all basically largely net short. You had a powerful move down. You had a higher low. I'm sorry, yeah, a hammer, a lower low, and then a higher low. Any move really over these, I usually use the first or the second hammer over those high of days. The second one to me is the long, and that played out. Considering that this range was so narrow, you could have used anything over these highs, but really it's the second bar. So you had the secure low. You had the higher low, lower low, bookended with another higher low. So that wound up being the play to the upside. The converse thing would be, after a move to the higher end of the range, after a move up, you'd have the lower high, actually TLT could be the secure high play. Let me just show you that. This could be the secure high play here. Look, you have a higher high with excess, and then a lower high. This is a secure high setup. So that's what a secure low looked like, and this is what a secure high looks like. IWM, we are still caught in the, are we? No, we're maybe a little below the range here. We are a little bit below this box. I've talked about this box being key. Let's keep it even more simple. Look where this gap was. The move below there got squirrely. So let's use that. I like that level. You had a reversal off the 50 MA and basically off that level. I'm going to just use that level in the channel. Anything with a little give to the channel, let's just call it that. So 1262, anything above there, I think there's still kind of keeps hope alive. Below there to me gets a little bit more squirrely, and if we really broke you can see the 200 here has been an important level. A successful retest, I think, would be a look below and fail, and we'd have a move up, but really a break here and then a break of the 200, I think, easily gets down to the 107s and could even get back, to some of these 50 and 61.8 fibs. Let's use that level. I like this 112.62. Qs, this is a little more concerning to me. Why? Like silver and gold, like I talked about, we made a lower high on this rally. SPY made a higher high, but these are the real risk, assets. This is all your FANG, and it made a lower low, and now we are below the channel, although right on the 100 MA. That's been a very key level for a while. You can see it was a point of contention here. Once it was really lost, it got squirrely. And we're basically on the backside of the downward regression line. I'll use the 100 MA here. Below Friday's low of day to me gets iffy, down to 104s, maybe even to 103s, and to the uptrend. Above the 2-day low, this range here, really, I want to see this get over 108.42. If we get back above there, then I think we could be forming the W pattern, and we could be back off to the races. Some of the problems for that have been, not AAA, although if you long Apple, you might need AAA, or maybe just AA, Alcoholics Anonymous. Apple is getting to some levels that I talked about. I said I thought we'd see this 50 and 61.8. I think this area will be an area to sell some out of the money puts near dated, somewhere between this 95.10 and this 93.77. The 61.8, of course, being near these reference lows. I will be doing that. I wouldn't say in size, but I'll be doing it for some testers around that area. I like playing, there's not really that much juice in here, so I don't like put ratios so much, maybe just outright put spreads, but I do like this area for a right or right out tester long. Facebook is doing what I've been saying it's going to do for weeks. A lot of people are getting very nervous about Facebook, but this is really coming down maybe to fill the gap, to get a trend line touch and maybe a 200 MA touch, which we know has been kind of the rock solid support. Here, the 100 MA held it. It could hold it again, and we are in a little bit of a channel. It's possible we fall out of the channel, but this could also do something like frustrate and bounce back up. And I wouldn't be getting sucked into this, but this could be an area of contention now into the 116s. I will be a buyer for right or right out in size down here, particularly if we have a confluence of the trend, the gap fill, and the 200 MA. I would like that, but this is the key right now. Short term, first and foremost, is the 100 MA. We'll see how that plays out. Like I said, longer term, I'm very bullish on Facebook. Short term, I'm a little bit cautious. So Amazon, I tweeted out. It was in response to a friend of mine. I said that we're likely at near an inflection point or maybe a short-term top in Amazon because I signed up for Prime. Yep. I'm half joking with that, but with regard to Amazon, this moved a lot. Look where this breakout came from. It had come up from the bottom. I think they forced it to 700. It's just kind of pulling back. It's doing it kind of begrudgingly. I'd be a buyer right near here, maybe near the trend and the 50 MA and this old breakout point. I don't think that they're going to just completely take Amazon apart. If we do get a larger market pullback, I think it could probably come down to this area, the 638 area. That was the high here. That was the high here. That was really the breakout. Somewhere between, I'd be interested in selling out of the money puts closer to the gap fill on a move down to the 638. Yeah, that's how I'll be doing it. I'd be selling some out of the money puts somewhere between the 585 and the 602. Remember, 585 was a big breakout. 602 is the gap fill. I like selling out of the money puts or playing put ratios for a move down there, but you really need to get this to really start coming down for that to, for the juice in those options and for that to be really playable. I think that would be playable on a longer time frame, not so much in like the next week or two, but I'm trying to think a little bit longer dated into where some levels might be of importance. So short term, I'm looking for a channel test that'll probably get a bounce. If that were to snap, then I would be thinking for a move down to here. If we do get down to there, then we sell those out of the money puts. Hope that was clear. If it's not, just ask some questions. I'd be happy to clarify. Google, I said I don't F with it unless it's somewhere on the channel lows or near the channel highs. I don't like playing the chop in here, and that has really proven to be, I think, the right way to play it. A lot of people got excited here. It tested. It kind of failed. We're back down into these lows. 682s, I think, are going to be possibly in play. I would be a buyer again near the channel low. Look at this. You have this channel low, you have this channel low, and you have the primary uptrend line. Earnings are coming up. So if we can get down to the channel low by earnings, I'll probably be more biased to try a right or right out long play, or for a play down to the channel, meaning like long these puts and short 2 times out of the money here, very near dated again. Yeah, I don't like playing with Google in between. This has just been a choppy, sloppy mess. Tesla makes it easy for me. They had a secondary. 215 is the pass don't pass line. If you are above the 100 MA and 215, the play is long. Below there is iffy, meaning GTFO. If we were to snap the 203.66, this swing low, I think we will see the 191s with the quickness and maybe even lower. But as long as we roughly are holding the 215s, the play is just hold it long. Some names I don't talk about a lot. I want to keep it sexy. SHAK. All right, so this was a bit of a look below and fail, below the trend line. We got into these reference ranges. I said to sell some out of the money puts. I'm just glad it worked out as well as it did. Next day was reversal up. This day here is the key. The high of day here was 36.28. It was a kind of a look above and fail right into the 100 and the 50. The next day was up, and then this day kind of held the range. We can use this day's high. Anything to me above 36.28 remains long. If we start getting below the 35.78, you can just, stop out. But anything above those levels, I think could still be higher. We now broke out over the 100, the 50, and the 20. This would consider a successful retest. We shouldn't really look below there again. If we start getting below, look, the low here was 35.75. The low here is 35.78. Anything below there to me now is a little bit more suspect and iffy. Anything above there to me remains more bullish. Really, really simple. Viacom, this has been in the news a lot. I'm actually long this. I just like that this broke the downtrend. You can see it looked above and failed, bought some time, came up above it, and now we're holding the 200. The 200 here was the resistance, so I realize now it's a long. I talked about buying it here on the retest of the 200. I actually did wind up selling some puts. If you didn't do it right on the 200, I talked about looking for a reversal bar. Look, you had two dojis here. Anything above those high of days could have been the entrance as well. But this was the spot to buy it. So as long as we're bullish, we're making higher highs and higher lows in a channel, though, so we might have a little pullback. We'll see. But as long as we hold the 200 MA, I will remain long. If we get back below there, I will either try right or right out short, or at the very least be out of the position. Gap Stores, GPS. This is another one I'm long. I don't remember where my entry was. Maybe I do. I think it was somewhere over the rainbow. I think it was here. This had to have been it. This is like the kind of day that I would buy. We had multiple days down, hammer here, and then a move over that, like forcing action lower, and then a move over that to break kind of the trend. Bull flagged a little bit, and then it was like a gap and go, and now we're consolidated. I love this, that we consolidated ahead of the gap, not just went into it, pulled back minorly, and now back into it. 50 MA is probably going to be some resistance. I'm looking for the gap fill here, and then maybe eventually even to the gap fill here. That might be a little bit too much to ask for. I'm probably going to book some here, and then maybe book some here, like somewhere in this bar. I don't think that it's going to be a smooth sailing gap fill, but maybe we do get to the 25s. Look, if you come down from here, the 61.8 is roughly into the high of this bar. I think somewhere between the 50 and the 61.8 is going to be my target. I'll kind of play it by ear. You can see there was a lot of consolidation here. I think these people are going to be anxious to get their money back. So yeah, I'm just thinking on the fly here. I think the 2181 or this 2215, which is the 38.2, and then the 50% fibs will be my target. So we'll keep it simple. If you get back below the 1943, which is roughly this low of the low of day here, and the breakout area, then maybe be a little bit smaller in your position. Yep, I think we'll end it there. I'm trying to make these videos a little bit shorter. If you're not following me, hit the subscribe button. You'll get notifications when I post new weekend review videos and Periscope rebroadcasts along with special edition videos. If you like the video, please hit the thumbs up. I always appreciate some feedback, so please leave some comments. It helps me make the videos better. If you're not following me on Twitter, follow me. It is at Justin Pulitzer. Have a great Father's Day, rest of your weekend, and cheers.